Want to get a real handle on how a massive Indian bank is doing and maybe where it's heading without slogging through endless reports.
Yeah, wading through pages and pages isn't always easy.
Exactly. So that's what we're up to today. We're taking a close look at the financial health and future plans of the State Bank of India, SBI.
And we've got a really interesting set of documents here. We're looking at SBI's audited results standalone and consolidated for the quarter and the full year ending March 31st, 2025.
Right. And the stock exchange announcements that went with them dated May 3rd.
Mm-hmm. And we also got that question about how SBI stacks up against other banks. We should probably keep that in the back of our minds as we go.
Good point. So for you listening, our mission here is simple. Pull out the key insights from all this.
The essentials.
Yeah, give you a clear, sort of digestible picture of SBI's recent performance, their strategies, those key numbers, but, without completely overwhelming you with data.
Makes sense. Where should we start? The big picture financials.
Okay, yeah, let's unpack this. Starting with that big picture. The audited financials, both standalone and consolidated, got an unmodified opinion.
Ah, okay. That's actually a really positive sign right off the bat.
It is, isn't it? What does that mean exactly? An unmodified opinion.
Well, it's sometimes called a clean opinion. Basically, the auditors are saying they believe the financial statements are presented fairly accurately. No major red flags.
Got it. So a good, clean bill of health from the auditors.
Pretty much.
And, we'll dig into the specific numbers in a moment, but the overall vibe seems to be a strong year, some interesting trends, definitely.
Mm-hmm.
Now, something shareholders will definitely want to hear about, the dividend. SBI has declared a pretty substantial dividend.
Oh, how substantial.
A 15.90 per equity share for the financial year ending March 31st, 2025.
Okay, 15.90 per share.
Which, get this, works out to 1,590%.
Wow, okay. 1,590%. That's unusually high, isn't it?
It really is.
A dividend like that, it could signal a few things, Maybe they've built up some serious distributable reserves.
Right.
And maybe they don't see an immediate need to reinvest all of that capital right now, even with fundraising plans on the horizon.
Or maybe just rewarding shareholders, attracting investors.
Could be that too, yeah. Looking at their dividend history, maybe comparing it to peers, would give us a bit more context on just how significant this payout is.
Good point. For anyone listening who is a shareholder, the record date to be eligible is Friday, May 16th, 2025.
Okay, May 16th.
And the payment date itself is set for Friday, May 30th, 2025. So, yeah, keep an eye on those dates.
Duly noted.
Now, looking ahead a bit, SBI has some pretty ambitious fundraising plans.
Ah, okay. What are they looking at?
They've got board approval to raise up to 25,000 crores in equity capital, including the share premium, of course.
25,000 crores. That is a significant amount.
It really is.
It definitely signals intentions for future growth, doesn't it? Maybe expansion.
Absolutely. And they're keeping their options open on how to do it. Could be a QIP.
A qualified institutions placement, right. Selling to big investors.
Yep. Or an FPO, a follow-on public offer, so selling more shares to the public.
Or maybe a mix.
Or, yeah, a combination, or any other way they're allowed to. But it won't be all at once.
Staggered, probably.
Exactly.
Yeah.
Planned in one or more tranches or stages during this financial year, 2025-26. And obviously, it all needs the usual regulatory approvals.
Right. The timing and the method they choose will likely depend on, market conditions at the time, what their strategic priorities are as the year goes on.
Makes sense. All right, should we dive into some of those key standalone numbers as of March 31st, 2025?
Let's do it. Standalone first, and we can compare to last year where we had the figures.
Okay. So for the full financial year 2025, SBI's total income hit 1,030,626.97 crore.
Okay, 1,30,000 crore.
Which is up quite nicely from 1,017,469.38 crore in FY24. That's a pretty solid jump.
It is. And that kind of growth in total income, it usually reflects, the bank's business expanding, more loans, maybe other revenue streams kicking in too.
Makes sense. Now, on the other side, expenses, interest paid out, that also went up. 76,891.55 crore in FY25.
Compared to?
Compared to around 69,387.14 crore the year before, which I guess is expected if your loan book is growing.
Generally, yes. More lending activity usually means higher interest expenses too.
Okay. And operating expenses also climbed 66,968.93 crore, up from 63,026.95 crore.
And how does that break down?
Well, the big driver seems to be employee costs. That went from about 29,595 crore to nearly 35,700 crore.
Quite a jump in employee costs. Could be salary revisions, maybe more staff, benefits changes,
Would be
perhaps.
any of those, yeah. Meanwhile, the other operating expenses barely moved, went up just slightly to 28,423.84 crore from
Yeah.
28,200.51 crore.
Interesting. So they seem to have kept a lid on those other costs, relatively speaking.
Looks like it. Now, the
Yeah.
bottom line, net profit. For FY25, SBI reported 43,199.91 crore.
Okay, almost 43,200 crore. And how does that compare to FY24?
A healthy rise from the euro 37,642.59 crore they reported back then.
So good growth in full year profit.
Yes. But here's a little twist.
Yeah.
When you look at the earnings per share, the EPS,
Uh-huh.
specifically for the fourth quarter Q4 and before any extraordinary items, it actually dipped slightly.
Oh, really? Dipped.
Yeah, it was 20.89 in Q4 of FY25 compared to 23.19 in Q4 of FY24.
Oh, okay. That is interesting. So full year profit up, but Q4 EPS down a bit.
Right, something to keep in mind.
It is, because, even with higher overall profit for the year, a quarterly dip like that,
Yeah,
it could be various things. Maybe more shares outstanding diluted the EPS,
possibly.
or maybe some specific costs were just bunched up in that last quarter. It really shows why you need to look at both the annual and the quarterly picture, doesn't it?
Absolutely, get the full story. Okay, moving on. Asset quality. How are the loans looking?
Always a crucial area for a bank.
And there's some encouraging news here, actually. The gross non-performing assets, NPAs, the bad loans, basically the total amount fell.
Okay, good sign. From what to what?
It dropped from 84,276.33 crore at the end of March 2024 down to 76,880.20 crore by March 2025.
Nice reduction. And as a percentage?
Even better, the gross NPA ratio improved from 2.24% down to 1.82%.
That's a significant improvement. Below 2% is quite good.
And the net NPAs, after provisions, also got better, down from 0.57% to just 0.47%.
Excellent sub-0.5% net NPA. That suggests, much better asset quality overall. Maybe the
Sure.
recovery strategies are
Seems
working.
like it. Lower NPAs generally mean the bank's in better shape financially.
Definitely a strong indicator. What about capital adequacy?
The capital adequacy ratio, or CAR, the key measure of financial strength, stayed pretty stable.
Okay.
It was 14.25% as of March 31st, 2025. Just a tiny dip from 14.28% the previous year, so still comfortably above the regulatory requirement.
Right, very stable there.
And this is where it gets really interesting, the provision coverage ratio, the PCR.
How much they've set aside for those bad loans.
Exactly. It stood at a solid 74.42% at the end of March 2025.
Okay, 74.42%. That's pretty robust.
But wait, there's more. If you include something called the AUCA,
AUCA, what's that?
Advanced Under Collection Account, if you include that, the PCR jumps dramatically to 92.08%.
92%. Wow. Okay, so including this AUCA really pushes up their coverage. That suggests a very strong cushion against potential losses from those NPAs.
It does, and the sheer size of this AUCA is just staggering.
Okay.
1,071,433.33 crore.
Whoa. That's huge. So this account holds funds set aside for loans they've already fully provided for, kind of like cleaning up the main balance sheet.
Exactly, but what's really striking is how old some of this stuff is.
How old?
Over 1,17,000 crore that's been sitting in that account for over 10 years.
10 years.
Yeah. Another, 95,000 crore is between 5 and 10 years old, and about 59,000 crore is under 5 years.
It really highlights the long tail of dealing with stressed assets, doesn't it? Even if they're fully provided for.
It does. You have to run it. I mean, even if the money's set aside, does managing such a huge pool of really old bad debt still tie up resources or management focus somehow?
That's a fair question. While technically provided for, the sheer volume and age, it points to the complexity and the just sustained effort needed to resolve those legacy NPAs. It's a reminder of the historical baggage the whole sector has carried.
True. Okay, let's quickly touch on the consolidated numbers. This gives us the picture for the whole SBI group, subsidiaries included.
Right, the bigger picture.
For FY25, consolidated total income hit 1,064,914.36 crore.
Okay, nearly 1,65,000 crore, up from
1,043,876.06 crore in FY24. So strong growth there too. And the consolidated net profit, also a healthy increase, rose to 61,076.62 crore in FY25.
61,000 crore compared to
51,076.52 crore the previous year. So it seems like the whole SBI ecosystem is doing pretty well.
Indeed. The fact that the consolidated growth looks even stronger than standalone suggests the subsidiaries and JVs are pulling their weight, making significant positive contributions.
Yeah, it looks that way. Okay, let's shift gears a bit. Talk about policy changes, updates. There have been quite a few things happening.
All right.
What's been changing?
Well, first off, SBI adopted that revised RBI framework for classifying and valuing investments. That kicked in April 1st, 2024.
Ah, yes, the new investment classification norms.
One key change was moving to the straight line method for amortizing floating rate bonds. Apparently, that had a one-time impact on their reserves.
Right, so instead of recognizing income or expense unevenly, it's spread out equally over the bond's life now. The RBI probably wanted more consistency, maybe more transparency there.
Makes sense.
But it does mean, directly comparing investment income, profit, loss figures between FY25 and FY24, it gets a bit tricky. You have to remember that accounting change happened. Absolutely. Good point. Also, the RBI gave banks the nod to reverse excess provisions on loans they transfer to asset reconstruction companies, ARCs.
Oh, under certain conditions, though, right? Like involving cash or government-backed security receipts?
Exactly. And because of this, SBI actually booked a credit of 3,874.99 crore to their P&L.
Wow, nearly 3,900 crore.
Yeah, specifically related to transfers to NRCL, the National Asset Reconstruction Company. That's a decent boost to profit.
It certainly is. So this isn't just some one-off accounting quirk. Does it actually give banks like SBI a real incentive to shift more NPAs to ARCs?
Seems like it would.
Yeah, it provides a direct financial benefit. The regulator is clearly trying to encourage banks to clean house, move those NPAs off their books, and this sweetens the deal a bit by letting them potentially reverse some earlier provisions.
Makes sense. Other news. Back in August 2024, SBI sold a 2% stake in the Clearing Corporation of India, CCIL.
Okay, CCIL used to be an associate, right?
It did. Sale made them a profit of about 112 crore, and yeah, CCIL is no longer counted as an associate company.
Just part of managing their investment portfolio, I suppose. Realizing some value, and that change in status means they'll account for CCIL differently going forward in the consolidated books.
Right. We also saw SBI's stake in Yes Bank come down a bit to 23.97%,
How did that happen?
mainly because some old share warrants got exercised and also employees exercising their stock options, ESOPs.
Ah, okay. So that gradual reduction in SBI's holding, it's kind of expected, part of Yes Bank's restructuring plan where SBI stepped in initially.
Exactly. Now, this is a big one.
Yeah.
Amalgamations. Several regional rural banks, RRBs, got merged or restructured effective May 1st, 2025.
Ah, the RB consolidation? Yeah, that's been ongoing.
This involves sponsor banks changing for some, even name changes. It's quite a show.
Any specific examples?
Yeah, like Andhra Pradesh Grameen Vikas Bank was split, part merged with Telangana Grameen Bank. SBI stays the sponsor there.
Okay.
But Rajasthan Maroda Gramin Bank is now Rajasthan Kshatriya Gramin Bank, and Bank of Baroda is the sponsor. And Utkal Grameen Bank is now Odisha Gramya Bank, sponsored by Indian Overseas Bank.
So quite a bit of movement there. These mergers are really aimed at making the RRBs more efficient, more stable, right? Pooling resources, leveraging the sponsor bank strengths.
That's the idea. It's definitely reshaping things in the rural banking space.
Big changes.
Also, GeoPayments Bank Ltd, its status changed from associate to joint venture for SBI.
Okay, why the change?
Well, SBI's stake dropped to 14.96% because they didn't participate in a recent rights issue.
So a strategic decision by SBI not to put more capital in there, leading to the stake dilution and status change, reflects their evolving view on that venture.
Seems like it. We also saw small reductions in SBI stakes in some key subsidiaries, SBI Cards, SBI Life, SBI General, SBI Funds Management.
Mostly due to ESOPs again, employee stock options.
Yeah, primarily that, just employees exercising their options. Pretty standard stuff.
Yeah, happens all the time. Relatively minor adjustments in the grand scheme of things.
On the international side, there's a new shareholders agreement involving PT Bank, SBI Indonesia, and a Korean bank, PT Bank, KB Hana Indonesia.
Okay. Result?
Resulted in SBI's stake in the Indonesian bank decreasing just slightly to 99.00%.
So perhaps some strategic partnership or investment by the Korean bank there.
Could be. And in terms of new ventures, SBI Funds Management set up a new wholly owned subsidiary.
Where? Doing what?
Called SBI Funds International IFSC Limited, and it's based in Gift City, Gandhinagar.
Ah, Gifty City. Interesting. Clearly looking at international financial services opportunities from that hub.
Definitely signals that ambition.
Hmm.
Just a couple quick name changes. SBI Cap Ventures is now SBI Ventures Limited,
Okay.
and SBI Global Factors is now just SBI Factors Limited. Some branding cleanup, looks like.
Streamlining, yeah.
And importantly, regarding their bonds, the listed non-convertible debt securities, SBI confirmed no deviations,
Meaning,
meaning the money raised for those bonds was used exactly as they said it would be.
good for transparency. How much are we talking about?
Total outstanding domestic bonds as of March 31st, 2025. A hefty euro 1,069,557.00 ARD crore. And yeah, no deviations reported for any of them.
That provides important reassurance for bond investors, doesn't it? That the bank is managing its debt responsibly.
Absolutely. Okay, let's touch briefly on related party transactions for the last 6 months ending March 31st, 2025.
Right. Always important to see how money moves within the group and its affiliates.
First thing to note, lots of transactions with state-controlled entities, like the RB's SBI sponsors or other nationalized banks.
Yeah.
Those actually don't have to be disclosed under current accounting rules and RBI guidelines.
Okay, so we won't see everything,
Cool.
but what is disclosed, transactions with associates and JVs.
Exactly. We see some examples.
Yeah.
Like SBI paying interest and IT support charges to Edge Technologies, which is their joint venture.
Mm-hmm.
Also, interest expenses and some non-fund commitments with Investec Capital Services and Associate.
Okay.
Interest expenses tied to those infrastructure JVs, Macquarie SBI, and the Oman India Joint Investment Fund Management Companies. And of course, quite a bit with Yes Bank, the associate. SBI earning interest income from them, providing non-fund commitments, selling services to them.
So a fair bit of back and forth there. These kinds of transactions are pretty normal for a big, complex group like SBI, right?
Oh yeah, absolutely.
Mm.
And the disclosures give us at least some visibility into these intercompany dealings.
What else stood out?
Well, we see SBI cards borrowing from Yes Bank and paying interest. SBI DFHI using an intraday liquidity facility from Yes Bank.
Okay.
Edge providing IT support not just to SBI, but also to subsidiaries like SBI Factors, SBI Fund Management, SBI General Insurance.
So Edge is quite integrated.
Seems so.
Yep.
Then you have SBI Capital Markets and SBI General Buying Services from Investec.
Okay.
SBI Fund Management, SBI General Buying Services from Yes Bank.
Lots of cross-selling and service provision.
Yeah. SBI General also had other expenses and sold services to Yes Bank. SBI Life earned interest from and bought services from Yes Bank.
Okay.
SBI SG Global Securities sold services to the management companies of those infrastructure JVs we mentioned.
Right.
And naturally, they disclose the remuneration for their key management personnel. It really paints a picture of just how interconnected all these different players in the financial sector are.
It does. Looking at these related party dealings, it gives you a much fuller understanding of the financial plumbing, the business flows within the SBI group, and its wider network.
Definitely. So let's try to wrap this up. What are the big takeaways here?
Well, summing it up, I'd say FY25 looks like a period of pretty strong financial performance for SBI overall.
Yeah, agreed. The profit growth, the improvement in NPAs, generally positive.
That huge dividend is certainly a standout point. Shareholders will be happy, and those big fundraising plans clearly signal ambition for future growth.
Right. And they're not standing still, are they? They're adapting
Yeah.
to regulatory changes, like with the investment valuations and the ARC provisions.
Mm-hmm. And that significant restructuring in the RB space is also a major development. Plus, managing all those subsidiary stakes and relationships.
So this deep dive really shows, I think, a bank that's not just posting good numbers, but is also actively maneuvering, right? Responding to the changing environment, positioning itself strategically.
Exactly. They seem to be navigating the evolving Indian banking landscape pretty proactively, trying to capitalize on opportunities while managing those legacy issues and new challenges.
You know, what really jumped out at me was the sheer scale of that AUCA, the Advance Under Collection Account. Seeing those numbers, especially the age of those fully provided bad loans, it really gives you a sense of the historical weight and the long cleanup process.
It does put things in perspective.
And that dividend,
Yeah.
15 out of 90%, you just don't see that number every day.
Definitely an attention grabber.
Plus, the scale of that RB restructuring, that's going to have real ripple effects in rural banking in those areas.
And I think the proactive capital raising, even with a decent CRR, points to a forward-looking strategy. They're likely gearing up to fund growth they see coming in the Indian economy. And those adjustments in accounting, handling ARC provisions, it all highlights how dynamic the regulatory side is and SBI's efforts to stay aligned.
Okay, so here's a final thought for you, our listener, to chew on. Considering everything we've seen, the results, the plans, the changes, what do you think are the biggest opportunities and maybe the biggest hurdles? facing SBI in the year ahead?
Good question. Is it going to be navigating that RRB transition smoothly, effectively using that potential 25,000 crore capital injection, managing competition, or maybe something else entirely?
Lots to think about. We definitely encourage you to dig into these details yourself, form your own conclusions. Thanks for joining us for this deep dive.
Yeah, we hope this gave you a much clearer picture of where SBI stands and where it might be heading. Feel free to explore the source documents further if you like, and let us know if more questions pop up.